This isn't just a little trade dispute, it's an all-out economic showdown, and things are getting serious. China isn't just reacting for the sake of it. Every move is calculated, and the targets? Crystal clear. They're going straight for the backbone of the US economy. We're talking about $60 billion worth of American goods now facing new tariffs. That includes farm products like soybeans and pork, direct hits on farmers in politically crucial states. But it doesn't stop at agriculture. Key tech components, the kind Silicon Valley depends on, are caught in the crossfire. Even Texas, a major player in energy exports, is feeling the heat. The message? Maximum economic pain for the US while keeping China's own risks low. And this isn't just about tit-for-tat tariffs. It's a long-term game to weaken critical American industries while shielding China's own interests. Tariffs don't make noise like explosions, but their impact runs just as deep. A 25% tariff on imported steel and aluminum doesn't just raise the price of metal, it sends shockwaves through entire industries. Car manufacturers, their costs spike. The aerospace sector, it takes a direct hit. Electronics companies scramble for new suppliers. And guess who ends up footing the bill? Consumers. From cars to kitchen appliances to smartphones, prices creep up, and suddenly, everyday life just got a lot more expensive. This isn't just a bunch of numbers floating around on charts. It's about real people feeling real impacts. Every time a new tariff is slapped on, it's not just about dollars and cents, it's about politics, too. And China? They know exactly how to play the game. They're not just picking random industries to target. They're going straight for areas that hit home in the US, like farming. Think about farmers in places like Iowa and Illinois. These states depend on selling crops like soybeans to China, and now, with heavy tariffs in place, they're taking a serious hit. But it's not just the farmers feeling the squeeze. The politicians who represent these regions, they're under growing pressure. Their voters are frustrated, and if something doesn't give, it could cost these leaders at the ballot box. That's exactly what China is banking on. This isn't just about raising tariffs, it's about turning up the heat politically, hoping US lawmakers push for deals they wouldn't normally consider. And this isn't happening in some sealed-off bubble. The entire world is watching, and global markets? They're feeling the turbulence. Countries like Canada, Mexico, and those in the European Union are stuck in the middle, dealing with supply chain chaos and unpredictable markets. Meanwhile, places like Vietnam and Malaysia, they're seeing opportunity. As companies look to dodge US-China tariffs, these countries are stepping up as new manufacturing hotspots. But trade wars don't just shake up supply chains, they send global markets into overdrive. One new tariff announcement? Boom! Commodity prices jump or tumble. Steel, aluminum, soybeans, you name it. Prices swing wildly as traders try to keep up. Tech companies? They get hammered when supply chain hiccups slow production. Even currency markets get pulled into the mess. The Chinese yuan weakens, raising concerns about devaluation, while the US dollar grows stronger, adding even more tension. It's a financial roller coaster with no brakes, and every twist makes things more unpredictable. The real question isn't just how markets will react, it's how long they can hold out before the cracks turn into permanent damage. This isn't just a simple tit-for-tat over tariffs. For China, it's part of a much bigger plan, a long-term strategy to cut back its reliance on the US and carve out new trade paths. Enter the Belt and Road Initiative. This massive project is like China building its own global highway system, stretching across Asia, Africa, and Europe. The goal? Create fresh supply chains that dodge US influence completely. But China's not stopping there. It's also trying to boost the status of its own currency, the yuan, hoping it can stand as a serious alternative to the US dollar in global trade. While China's thinking long-term, the US is feeling the heat right now. Big industries, like automotive, agriculture, and tech, are taking heavy hits. Car manufacturers are dealing with higher steel and aluminum costs, which means making vehicles just got pricier. Tech companies, they're scrambling. Many depend on Chinese-made parts, and with tariffs in place, supply chains are slowing down, costs are rising, and deadlines are slipping. The pressure's mounting, and now the US faces a tough call: cut a deal or dig in even deeper. But here's the thing, Every crisis creates winners and losers, and while the US and China battle it out, other countries are cashing in on the chaos. Vietnam, Malaysia, and Mexico are becoming hotspots for manufacturing as companies search for tariff-free zones to keep costs low. Russia and Middle Eastern nations, they're boosting their energy exports to China, stepping in to supply oil and natural gas where the US now falls short. And over in Europe, the European Union is quietly making moves, strengthening ties with both the US and China, positioning itself as a valuable trade partner in a divided market. Markets don't sit around waiting for politicians to sort things out. They react in real time, and when news breaks, they move fast. This trade war, it sent global markets into a tailspin. Every time a new tariff is announced, prices for things like steel, aluminum, and soybeans swing wildly. One day they're up, the next they're down. It's like watching a financial roller coaster with no seatbelts. Tech companies have been especially hard hit. With supply chains tangled up in tariffs, many are scrambling to keep production on track, leading to big drops in stock prices. Even the currency markets are caught in the storm. The Chinese yuan keeps flirting with devaluation, while the US dollar grows stronger, throwing even more chaos into the global trade mix. And investors, they're glued to every headline, wondering not just how bad it'll get, but how long the damage will last. But here's where things get even more complicated. This isn't just about dollars and cents anymore. It's morphed into a high-stakes diplomatic standoff with global consequences. Neither the US nor China is backing down. Trade talks are on shaky ground, and with tensions rising, the risk of a major misstep is growing. One wrong move, and this could spiral out of the trade zone and into a much bigger geopolitical crisis. Meanwhile, countries like Japan and South Korea are walking a tightrope, trying to keep good relationships with both the US and China without getting dragged into the mess. The longer this standoff drags on, the harder it'll be to walk things back without both sides taking serious, long-lasting hits, economically and diplomatically. And here's the thing: tariffs? They're just the surface. China's playing a deeper, more strategic game. It's not about slapping random taxes on goods. It's about hitting where it really hurts. Take US agricultural exports, things like soybeans and pork. These aren't just big money items, they're political pressure points, especially in swing states where farmer votes can tip an election. By targeting these products, China isn't just trying to mess with the economy, it's putting pressure on American politicians to rethink their strategy. China isn't just picking random industries to target, it's going straight for the sectors that matter most. Take automotive parts and energy exports, especially liquefied natural gas, LNG. The US was betting big on selling more LNG to China, expecting a booming market. Now, that future is uncertain. Then there's technology. China's new measures aren't just about raising costs, they're disrupting the entire Silicon Valley supply chain, making it harder for American companies to produce the latest high-tech gadgets. But the US isn't backing down. With 25% tariffs on steel and aluminum, Washington is sending a strong message. It's ready to push back. The problem? This strategy isn't without consequences. Higher steel and aluminum prices mean higher costs for industries that depend on them: construction, car manufacturing, and aerospace. Automakers are already feeling the pinch. Making cars is getting more expensive, and some companies are warning that could lead to fewer jobs and slower production. And it's not just the big players struggling. Small manufacturers that rely on imported machinery are seeing tighter profit margins, delays, and increased costs. Meanwhile, farmers, who took the first big hit in this trade war, are still trying to recover. Many fear things could get worse, especially if tariffs cut them off from key export markets for good. If the US raises tariffs even further, the effects will be impossible to ignore. Supply chains will get messier, and prices for everyday goods will rise. For most people, a trade war feels like something happening far away until they start seeing it in their wallets. Major news outlets are already reporting price hikes on essentials like electronics, clothing, and household appliances, and it doesn't stop there. Cars and trucks are getting pricier to build, which means more expensive price tags at dealerships. Even grocery stores aren't immune. food prices are climbing as agricultural tariffs shake up the market. Now, let's talk about the folks who often get overlooked in all this: small businesses. Thousands of them depend on Chinese imports to keep their shelves stocked and their operations running. But with tariffs driving up costs, they're stuck between a rock and a hard place. Do they eat the extra cost? Do they raise prices and risk losing customers? Or do they scale back and hope to survive the storm? None of these are great options. This trade war isn't just a big political tug-of-war between superpowers. It's hitting regular people where it hurts most, their wallets. And the big question is, where does this all go from here? There aren't many roads ahead, and honestly, none of them are smooth. Option 1, the fight keeps heating up. More tariffs, more retaliation, and before you know it, we're staring down a full-on economic crisis, the kind that leaves lasting scars on both countries and shakes up global markets. Option 2, a quick ceasefire. Maybe both sides agree to hit the pause button and cool off for a bit. But unless they tackle the deeper issues causing this standoff, any peace deal would be pretty flimsy, like putting a band-aid on a broken bone. Option 3, a total trade makeover. This is the long game. Over time, China could shift its focus to other markets, cutting back on its reliance on US trade. That would leave the US and China locked in a slow-burning economic rivalry that could stretch on for decades. For now, the only thing that's crystal clear is that the stakes are rising and the entire world is watching with bated breath. But what do you think? Is there a peaceful way out of this mess? Or are we headed for an economic showdown that'll change global trade forever? Drop your thoughts in the comments.